WNIS. Welcome to the show that's all about your money with Michael Scott Forehand from the Forehand Agency. Yes. Is that the first time I've ever said your first name on the air?
It might be.
Might be.
Yeah.
Yeah.
Yes, and that's true. If you think about it, my first name is Michael, my middle name is Scott, and yes, I've seen all the shows. He is one of my favorite characters, and he makes me crack up every time I see him.
You always miss 100% of the shots you don't take.
Uh-huh. Yep.
Wayne Gretzky.
Yep.
Michael Scott.
Mm-hmm.
That's right.
Mm-hmm.
Scott Forehand from the Forehand Agency here. 757-278-1264 is his number if you're in Hampton Roads. If you're not in Hampton Roads, that's okay. Call toll-free 1-800-677-0989 or check out his website, forehandagency.com. I do believe we'll have Jonathan Daly joining us via the magic of telephone coming up as well. What's going on, Scott? How you doing, man?
Hey, man, we just got back from Denver from a big conference and had a good time, and brought back a little gift, which is currently residing in my nose. So that's why the pile of tissues in front of me exists, and yeah. So, but we're on the mend and back at it. And
you must be like me. Every time you travel, you get
man.
something.
So,
Yeah.
I love families, I love kids, but if you've got one, try to get them to not climb on the back of my seat and sneeze in my face, and that's what happened. So I'm pretty sure the young lad from Denver that flew into Norfolk with blonde hair and blue eyes that wanted to turn around and play games with me, I'm pretty sure he's the one who gave me this gift. And I just wanted to say thank you.
You know who you are.
Yep. Thank you very much. And thanks to your parents. Thank you very much.
That's right.
And
it's good parenting right there.
Yeah, it's awesome. Yeah. So I guess I was the babysitter for that 10-minute segment of the flight. So all good, though. No harm, no foul. And what does not kill us makes us stronger, right? At least that's what I've heard.
Yeah.
So anyway, so we're back. We're back at work, back down in Edenton, North Carolina, and loving it there. And just yesterday was beautiful and 80, no humidity, and windy, and just gorgeous. And definitely happy where we're living now. Can't wait for the holiday season to start down there. Got a lot of little small town celebrations I'm excited to take part in, and but anyway, that's my future. That's not what we're here to talk about today, though. We're here to talk about money today. Money, Lee, money,
and everyone else's future.
There you go.
Yeah.
So, is Mr. Daly able to chime in yet?
He certainly is. Jonathan Daly joining us via the magic of telephone. Good morning, buddy. How you doing?
Doing well, guys. Thanks for having me, Scott. I know that I'm remote today. I have a little one that's sick, not because she was sneezing on you on an airplane, but because she started school last week, and we get the same. It's the same when you're around other people and other people's kids. Things, germs tend to find their way as souvenirs. But I'm grateful to be on the show. Thanks for having me. And yeah, and I agree, Lee, that Michael Scott is quite the character, and he makes me laugh every single time as well, not just on The Office, but in The Office.
And Scott Forehand is quite the character who makes us laugh as well.
Yeah. And for those of you that are new, Jonathan runs our Richmond office, and I have roped him. I actually voluntold him a couple of times to come join us on this show, and he's been nice enough to acquiesce in my request. And thank you very much, Jonathan, for being part of this. And also for hanging out and running the Richmond office for us. We really appreciate you. All right. So
my pleasure, as always.
Right on. So normally we jump into and we got away from it last time, but we're going to do it this time. We're going to get back into some charting news that's happening, and then we'll talk about a little crypto. And Jonathan, feel free to add in color anytime you like. And then we're going to move into some annuity discussions and some infinite banking and smart banking discussions. So first things first, as with always, you've got macro trends and micro trends in the markets, and there's certain aspects of the market that mean more. There's certain aspects of the market that really drive the market. There's a lot of noise, and you can create a chart with anything. But the specifics of the chart and how it impacts the market as a whole are kind of what I try to do. So I'm really mostly focusing on macro trends. And the first one I'm going to look at is the retail sales. So retail sales typically have a rise in the summer, a drop in the fall, a drop in the spring, and then again a rise in the holiday season. But for the first time in a long time, we've actually seen a rise 2 months in a row, two consecutive months. That's normal for the for the beginning of a school year, but the rise is normal for the beginning of a school year, but it's not normal to have a rise in the middle of the summer, and that's what we saw. We actually saw a rise in June and July, which is abnormal. So that's a good indicator that the market is healthy and that at least the retail buying market is healthy, that's part of what makes up our economy. And that was an interesting it was an interesting observation. We saw a couple of months up at the end of 2024, which is right after the presidential election happened, and there was a feeling of at least one side of the aisle, a positive feeling about the direction of the country, and people were buying stuff again, and that's probably why we saw that 4-month uptick. But this is, like I said, this is abnormal to see it in the summertime. So I'm excited about that. You got any comment on that one, Jonathan?
No, I just want to, let everybody know, the listeners know that, our back-to-school shopping was significantly impacted that market trend in retail stock. So, and then, you have the announcement from Chairman of the Fed yesterday, and we'll probably get into that in a little bit. But, no, you're absolutely right that it is a significant difference from what we're used to, and it looks good.
Yep. All right. So second thing, so you've got really three pillars of the American market, three specific sectors that really drive as a whole the economy in the market. The next one is industrial production, and with all these deals that the president's making, and the institution of tariffs, and the refocus of bringing the business production, especially the industrial side, back to the United States, it's going to create a massive amount of jobs, a massive amount of income, a massive amount of business. And we actually saw that as demonstrated in what happened with the industrial production contracting. So anytime a big thing is going to be created, whether it's going to be another company buying a large set of products for the running of their business that has to be used doing some kind of industrial production. Anytime a company is going to go out and decide to open up a new plant, all these things kind of coalesce into the total number of contracts, industrial production contracts. And what we saw was, and this is, you have to dig into the numbers, we actually saw a slight decrease in July. We saw a big increase in June. But here's the thing. If you go back in time and you look at Julys of the past, there's almost always a decrease in July. And the decrease that we saw in July this time was only about 1/8 of what we normally see, about 12% of what we normally see. So the normal reduction that we saw was significantly smaller. The reduction we saw was significantly smaller than what we saw in the past. So that's actually a pretty clear indication that things are definitely on the upswing, and I think the people that are paying attention actually feel it. And you can see it. You can see it reflected in the stock market. You can see it reflected in people's general happiness with the direction of the economy. And so it's just it's magnified there by the fact that we did not see the normal, what we would consider normal reduction in industrial production contracts. We saw only a slight reduction. Any comment on that one, Mr. Daly?
No, I think it's as you said, when you bring a manufacturer back to the U.S., you have a couple of things that are kind of off kilter from what we're used to, it's unexpectedly expected, right? You get more manufacturing here, you have the rising cost of, retail and places like Walmart, Target. So you get an uptick. But I think most of the speculation was that the retail economy would kind of tick, but I think it's holding strong. It's been robust, and it's they're all good signals, which, to the skeptic's mind is a little weary. Our eyes get big. We're like, wait a minute, we had a weaker than expected job report released in July, and August is still looking good. Like, what's going on? I think it is all a microcosm of what's happening, bringing manufacturing back and starting to reestablish a little bit more of our own, self-stick-to-itiveness, if you will.
Right. And here's the interesting thing, too. What we're seeing right now as reflected in the market, this is only being reflexive of the deals that are happening. The contracts are going to be written, right? This is not actually what the end result is going to be. The end result is going to be massive, way bigger than what we're anticipating, because it's all happening at once. And that's, this is really, I certainly am a conservative and I lean Republican, and I want everybody to succeed financially and economically. I want our country to succeed financially and economically. But what I see and what President Trump has said about there being a new golden age, I think he's right. I think with all these things are lining up and all these ducks are getting in a row, it's going to be an incredible ride for the next probably 4, 6, 10 years. And what I'm getting ready to say is, again, going to further emphasize that. So what I'm looking at now, I always talk about housing and how impactful housing is on the market as a whole and on our economy as a whole. And one chart says it all, really. Multifamily housing. So so that means two things. Number one, if we're building more multifamily houses, that means we have a need for more housing. That's a good thing. It means the population's growing. And if we're taking out more contracts to build, getting more permits to build, all those things, that wherever that's happening, that's going to be a significant direct partially environmental, but mostly economical impact for the surrounding area, because that means you're having a higher population base. You got more people buying everything, all right? And what we just saw is very unusual. We saw 2 months in a row of increased housing starts for multifamily. First time in years that this has happened. And what's really abnormal about it, again, it's when it happened. It happened in the summertime. And these multifamily starts, usually they're starting late winter, early spring. And now it's happening in the summertime. It's happening June, July, and I bet we're going to see August rise as well. So this is really, really encouraging for what's getting ready to happen. Any comments on that one, Mr. Daly?
No, just a big old opinion. I was talking to a client who's actually developing a lot of these multifamily units out in Utah and out in Idaho, and the trend seems to be shifting towards this new American dream. You have millennials and you have Gen Z who are kind of getting away from the white picket fence in the big yard and kind of just resting on all I need is an apartment or a duplex and what I can afford, and kind of going that economic route. So you see these mass surges in multifamily homes, and for that, it's people are entering the market again, buying condos, getting apartments, investing in that dwelling as opposed to just living at mom and dad's, which is good for us young parents with young kids on the rise, because we know our kids aren't going to be here till they're 30, 40 years old. But you're right. You see an uptick in the real estate market, and also bleeding in the materials to build these major, these massive projects. So, and going back to what you said about the golden age and golden era with the Trump administration, is I think you're right. I think that these contracts are rolling in. You have manufacturing moving back to the U.S. You have a lot of optimism in future markets because there's a battle cry for it. There's a recognized that up in DC that it's important to build first and build here, and I think you're absolutely right, Mr. Forehand.
Yes, yeah, thanks, Mr. Daly. And it's interesting, when we start talking to our clients that have these projects. I've got a couple of them myself down in Florida and in Texas that are doing some of this stuff. They've been screaming that for a while. They've been saying that there was a trend moving towards multifamily, and that the most recent generations of home buyers are not looking for what you said, the white picket fence and everything like that. And when you get down to it, I understand, because they don't want to have to mow the grass. They don't want to have to worry about the well. They don't want those other things that come with traditional home buying, and the quote unquote American dream home. And I get it. I understand completely. And I think that this trend, I think it's a healthy trend, because it's certainly going to provide, at least for those folks, these are going to be lower cost of entry vehicles for people to get into home ownership, which means in the end they're going to be able to afford a massive retirement as long as they're investing in retirement correctly, and and can kind of step away from some of that 401k stuff that is not quite as beneficial as it used to be, and look more towards some of the things that you're doing, with the private pension income annuity stuff and the infinite banking, smart banking things, and being able to create those retirements that are tax-free, that we can start when we want to start retiring, not when the IRS says we can retire, which they're changing those rules here shortly anyway. So I think this is a healthy move for our population, and certainly the whole home building, home buying, permitting, all that stuff is going to be translate into a positive move for our economy, as it already is. All right, got two more charts to go over. These are both really interesting and super impactful. And let's see, which one do I want to talk about first? All right. Let's talk about the stock market in general. So if people, when they talk about the market, you talk about different indexes. You talk about the NASDAQ and the Russell 2000 and the S&P 500 and all that stuff. And most people can conceptually at least get what we're talking about. We understand that, like, the NASDAQ chart is really an index that's based on a lot of technical type stocks, and that the Russell 2000 is really an index that's focused on small cap stocks, small companies, less than probably $25 or $35 million in value. And the S&P 500, that's the big boys. Those are the top 500 stocks from the top 500 companies that are performing the best in the S&P. And then depending on how you look at it, maybe it's reevaluated daily, maybe it's reevaluated monthly, maybe it's reevaluated once a year, and the companies that are not performing as well are taken out of the index, and the ones that are now performing better for that particular segment of the market, like if they're in the energy stocks, then they'll remove an energy stock and add a different energy stock in that's outperforming. So when we look at the current S&P index, there's some really interesting things. Really, really interesting things. And here's the two primary takeaways that I'm getting out of this. In any technical analysis of a stock chart, you've got established points of resistance, which means that's the ceiling, if you will, of where we're not necessarily going to move above that unless there's some kind of major trigger event. And then we've got points of support. And points of support are the floor. That's where most likely the market is not going to push that stock below, or that group of stocks, in this case the index, not going to push that group of stocks below that level unless there's some kind of major triggering event. And typically those major triggering events can be things like a war. They can be things like a very, very unpopular president. They can be things like some kind of national scandal, some kind of failure of some kind of segment of our of our economy, like the failure of the banking industry that happened in 2008 with all the subprime mortgages and all that other stuff. Those are events that can push things either above the point of resistance or below the point of support. And what we just recently saw and what we're seeing right this minute is that we are now seeing a new higher point of resistance, which means that the market and the market cap is pushing the entire S&P 500 up. It's creating a new ceiling, a new point of resistance. That by itself is good. When you couple it with the other thing that's important, which is we've also seen a new level in support. The floor has increased. That's a double whammy. That's when you've got both things are saying, yep, we're going to have new highs, and yes, there's no longer the low that was before. That's not the low anymore. The low is going to be higher than that now. So when we're looking at from a trading capacity or trading mechanism, we look at the range, the trading range of where we expect to go. The range has been increased. So that means that if you were in the S&P before, you just made a bunch of money. And if you're in the S&P now, you're in great space. It's still probably a buy. And if you're thinking about jumping in, all things are pointing towards a higher numbers, and it's a good time to buy in. So all these are really, really positive economic indicators, as we're all feeling anyway. But now the charts support it. And that's pretty impressive. It certainly caused me to raise some eyebrows. What do you think about that one, Mr. Daly?
Yeah, so I don't want to come off as a hypocrite as we talk about optimism in the stock market, because generally our business has to do with that conservative side, right, that monitors our markets, indices.
Yep.
But you're right. It's that you see these higher highs and these higher lows. And I always challenge my clients to think about this, right? There is so much money in the U.S. stock market, and politicians are not immune to that. And we have more money from politicians inside of this U.S. stock market. And when the stock market shows wavering concerns, it concerns them and their livelihood as well. They're U.S. citizens, they're red-blooded Americans, and they want our economy to grow just as much as the rest of us. So that being said, if you're in a position where you're nearing retirement, you probably don't want to play this young man's game of if this, then that scenarios where, as you had mentioned, none of those triggering events are predictable. Think about the pandemic. Nobody knew in February that was going to happen. Think about the 2008 market crash. People saw it on the horizon, but they weren't spreading it at the top of their lungs with a megaphone warning everybody about these triggering events. They can happen. And if you're 5-10 years away from retirement, the last thing you want to happen is to have your life savings in a volatile situation. That being said, for us, in our 30s and those of them in their 20s, that this optimism with the stock market is absolutely a game they should be playing. The longevity of the U.S. economy has survived through all of those aforementioned triggering events, and there's no reason to believe that they won't going forward. How long is your retirement horizon is a question that you have to ask. Where is the money moving is a question you have to ask. Yes, the highs are higher and the lows are higher, but nobody wants to take a critical hit to their life savings prior to retirement. So I love what we're talking about. I tell clients the same thing. You should not have all your eggs in one basket, but if you are close to cashing in and you're close to riding that wave of retirement and you want to set your lifestyle up for success and your livelihood up for success, then putting your eggs in the right basket is of the utmost importance for all of us. So some things to consider, and that's why we say you should have one or even two financial professionals in your pocket. Because if it's speculation and observation and you're going off your gut, then there are more sob stories than hero journeys in the world of finance. And having a professional that you can call on and ask and kind of have this open discussion, this, bouncing some ideas off of, is pivotal. It is absolutely important, and nobody's immune to it.
Right on. All right, the last chart I'm going to talk about, and I think we'll take a quick break after this. This is So this is a confirmatory chart, meaning that all the things we've been talking about, there are charts that kind of coalesce all the data, and if the information is pointing positive and this next chart points negative, then the information is suspect. If the degree of positiveness is chart and we see a really high spike, then that can really tell us, or a low spike, that can tell us whether the direction that we're headed is short-term, mid-term, or long-term going to continue, or maybe if it's getting ready to transition and flip. So this next chart, which I usually use probably 6 or 8 times a year for this conversation, is the technical composite. And what we're looking at really is we're looking at the last 24 months of S&P movement based on the technical composite chart. And on this chart, there's a couple of areas that I call no man's land, where they're the very highest of the chart and the very lowest of the chart. And typically, the technical composite is going to have movements and it's going to have plotting that's going to be within that middle section of the area, not the super high and not the super low. And what typically is going to happen, and what we just saw, is when the traditional S&P chart hits that point of support, it's going to be reflected in the technical composite hitting one of the edges of those no man lands. So in the point of support, that means the floor. That means it should hit the bottom part, or the top of the bottom section. That's the no man's land, and that's exactly what it did 2 months ago. It bounced on the standard chart, and the technical composite reflected it as a bounce off the edge of the no man's land. That means, and this is really critical, that means that the chart and the underlying index, the S&P, it's following normal parameters, which means it becomes predictable, which is pretty cool. So what we just saw, we saw a bounce. We hit the bottom, and it bounced up in June. In July, it hit another. It didn't go all the way to the top of the area, but to the top no man's land, but it still came close. And now it's kind of leveling out, and now it's back to the middle of the technical composite. And we don't have time to do it today, but there's some other chart indicators that you can look at that are going to predict what's going to happen in the next time frames, the next week, the next 2 weeks, the next month, the next year, that kind of stuff. And that means that when we're looking at this technical composite that's confirming what the regular chart is telling us, we can actually bank our bet, and we can be assuming that about 90% accuracy of what we think is going to happen is what's going to happen. And that's pretty interesting, and it's pointing up. So the S&P should continue on its upward move, which means anything that's part of the S&P should have a pretty good run, unless you're there aren't many problem areas of the S&P right this minute, so you should have a pretty good run. And that's kind of where we sit with this. So most of the economic news, at least from a charting perspective, is fantastic. The things that can make it better would be if the Fed decides to make a move, multiple moves, as was predicted last year, and then depending on what happens certainly with Ukraine and Russia, and Trump's continuing resolution to get rid of people dying around the planet. Got any comments on that one, Mr. Daly, before we go to break?
Yeah, I think I'll just try to sum that up with a pretty quick analogy, because we're moving into football season. What I heard there is that, Scott, you're like a quarterback, and you're like QB1, and you're like a top 10 in the league, and you know what to look for, and you know what you see, and you know when to throw the ball, and you know when the defense is smothering your receiver and when not to throw the ball. And if you're a listener right now trying to keep up with the technical composites and no man land, just understand that to you viewers and listeners, it's like fantasy football. You have to hire the right quarterback to make the right decisions, and it sounds like you need to find the Scott Forehand and have somebody in your life that knows what they're looking for, how to read the field, when to make good decisions, and when not to throw the ball. If you're taking notes, the biggest note that you need to take is the phone number, and the biggest action that you need to do is call it and have a conversation, because I don't know anybody, as many conversations as I have, that makes better quarterback decisions in the financial space than Mr. Michael Scott Forehand.
Wow. Now I owe you a tip, don't I, Doug?
Lunch will do. Lunch will do.
All right, we'll do lunch. All right. So we do a segment from time to time called Crypto Corner, and we're going to do that right now. This is going to be a short one, but we've got some news. So before I say anything, I just want to say this is not advice to go out and buy any specific crypto or sell any specific crypto coin. This is just information that I'm relaying that has been taken from a lot of the news that's out there and a lot of the other people that are crypto experts. Okay? And I'm not saying that I disagree with this, and I'm not saying I agree with this, but take it or leave it. So here we go. First off, so there's hundreds of coins that are out there, and there are different types of coins and things that have specific technologies linked to them, which is why they may have certain growth. And for that, I'm talking about specifically like Ethereum and some other pieces. And there's things called meme coins, which are coins that really don't have any value other than it's a commodity that people can buy and sell and speculate on. And so one of those coins that I follow is called Dogecoin, DOGE. And there's enough data on all these coins at this point where you can actually start doing charting and do a technical analysis on the chart. And this one has enough technical analysis. There are certain formations that you can see. There's a thing called head and shoulders where you see a spike with a taller spike and then a shorter spike immediately following it. And each one of these types of formations will indicate a potential move in the near term. And so we still look at things in terms of bullish versus bearish. And the Dogecoin just had a pretty significant bullish formation. So what that means to me, and what I'm seeing on the boards, and what I see out there in other opinions that have been published, is that it looks like Dogecoin might be a short-term buy. All right, doesn't mean I'm not saying buy it and sell it. I'm just saying it looks like it's a short-term buy. Second thing, the big boy on the block is Bitcoin. Everybody knows it. Everybody's heard of it. The second big boy is probably Ethereum. And what we're seeing and what they're saying and what I tend to agree with is that we're seeing some indications on the chart term growth in those two coin segments. And so if you were thinking about jumping in, those might be good options for you. And this is especially important for people if you're a younger investor, in your 20s and 30s, and you're not necessarily worried about what the performance is going to be like over the next 5 years, but maybe what it's going to be like over the next 15 years. These would be great coins to jump in on. And that means that we're not necessarily worried about calling the timing right as far as whether we're buying on a low or on a high. We're just looking at buying some because it's going to have some appreciation over time. Bitcoin, it's crazy if you're watching these charts. It's setting new points of support, the floors, and it's setting new points of resistance, the ceiling, almost weekly at this point. And it's still the trend is still there. It's still pointing to a new ceiling, and it looks like it's going to hit a new high here shortly. I think it hit a new high last week too, if my recollection is correct. So Bitcoin is a good place to be. And then finally, if we're looking for some real, if you look at all the coins that are out there that have the highest potential of upside potential, then you've got to be focusing on two of them really, which is going to be XRP and Solana. And the reason why we're looking at those two coins is because both of those have technology behind them that's going to support the crypto industry. And because of that, because there's technology involved, not just a blockchain. There's technology that it's going to be something that is going to be able to capitalize, which means the coin can actually increase in value beyond just supply and demand, just because of the value, the core value of that particular entity itself. So that's why again, and we're seeing bullish formations in both. So I think XRP and Solana are also going to be, for people that are looking to jump in at a reduced cost level, those are good ones. So there's the end of my little crypto corner. You got any comments, Mr. Daly?
Nope, just that, like you said, with any market, it's pattern recognition, and this is human financial behavior that you're looking at. And for those that kind of get lost in the weeds, that meme coins are like day trading. It's good and it's trendy and people do it. And the Bitcoins, Solana's, XRPs, the Ethereums, that's more like your Warren Buffett plays that you're saying. You know it's going to go up. You know it isn't going anywhere. You can put, funds in there and watch it grow with the market and the longevity of it all. And nope, I'm right there with you. I love talking about crypto, as weird as it is now, but you're absolutely right. If there's money to be made, then we should probably bring it up, and I'm glad that you did.
Yep. So yeah, and actually, there's some, certainly, if you're a trader, a stock trader, there's certainly some ETFs. BlackRock's got a good one. There's an Ethereum one coming out, and there's a couple of ETFs that are out there. They're going to reference crypto, so you can, in theory, get a quasi crypto position without actually being in the crypto and having to open up a wallet and all those other things associated with buying crypto directly. All right, so Mr. Daly, we got about 7 minutes left. So let's talk about something you want to talk about. What do you want to talk about?
Yeah, I just want to talk about, I always reference the game show Who Wants to Be a Millionaire, and when we're talking money, let's reference a game show called Wants to Be a Millionaire.
There you go.
When you get to that question and Regis tells you that you can't leave home with anything less than that much money, I like to talk about that, especially as we near retirement, when we get into the conversation about protecting life savings. I like to remind people that there are products out there that can allow you to bank your life savings. Right? We call them private pensions. We build them specific to situations. We look for a couple main things. So if you have some of these pain points, and then a private pension might be right for you. If you're worried about running out of money, which a lot of retirees come to that realization as soon as they approach retirement. If you're worried about running out of money, we need to talk. If you're worried about your lifestyle changing, then we need to talk. If we're worried about what we're going to leave to the people we love the most, then we need to talk, because a private pension annuity might be right for you. I want to get away from what everybody thinks of when they think of annuity. They're thinking of putting money in and just getting an income out of it. And while that's certainly a good deal for a lot of people, we're talking about, that appreciating some index interest from year to year. So essentially taking some money, making sure that it doesn't run out, continuing to earn with these markets that we are referencing on the call today, and making that money last forever, getting a substantial income out of it, and then making sure that we don't deplete all of our life savings when we pass away, so that person who's next up to carry that torch can be blessed with the money and the wealth that you've created in this lifetime. So get in contact with us at the Forehand Agency and make sure that you know that your retirement plan is fortified, so that you don't run out of money, so that you can appreciate the money that you saved in retirement, and so that you can leave that legacy that you want to leave. Because who doesn't want to eat their cake and have it too, and at the end of the day, leave some cake for the people they love the most? Private pension annuities, contact us. We'd love to have that conversation, because it's about building your dream plan, and we keep you in mind, and everything that you want is at the forefront of that conversation. That's my passion, Mr. Forehand.
Yeah, no, and Daly, we talk a lot, and we talk about planning sessions and stuff for our clients. And the thing I love about working with you is that you're the guy that you cross your T's and you dot your I's, and you're the guy that you're asking those deep, hard questions that people, unfortunately, they have to face it. And the cool thing is if we talk soon enough, there isn't any problem that can't be fixed with a couple of years of compounding. Not really. And but most of the time, people don't know exactly where they are. And I know that you're very diligent in finding out that information, so that we can make sure that the plans that are presented to the client are ones that are going to do exactly what the client's looking for. So super proud to be in business with you, Mr. Daly. Proud of you, and looking forward to continuing this relationship as we move forward in time. And just to touch base on another topic, I know that you're talking about the private pension side of what we do. And the definition of a pension is just an income stream. That's it. That's what it is. So the income stream doesn't necessarily have to come from one of these private pensions that we're talking about, which are usually based in some form of an annuity. But they can also come from a tax-free program, tax-free life insurance. And this is the stuff that, if you listen to Ted Brenna's interview from October of 22 with Bloomberg, this is what he was talking about. And for those of you who don't know who Ted Brenna is the gentleman that invented the 401k back in the 1970s when he was working at Johnson & Johnson and working with the State Department, not State Department, with the government for designing alternatives for income for people that were employed by traditional employers. And one of the things that he said was that there's too much risk associated with traditional 401ks, the ones that he was in part developer of. And he said that they're not being treated the way that they were when he designed them. They're not being taxed the way that they were when he was designed them. There's too many unknowns associated with them. And there's too much opportunity for the federal government to change the game for you while you're still playing that game. And he's right, because the taxes change every year. The amount that you owe changes every year based on what you earn. And there's still that opportunity out there. Even as of 2 years ago, there was a conversation passing around Capitol Hill where they were looking at ways to start taxing people's 401ks while they were still in them. And I know there's this push for 401ks right now with the president, which is great. But one of the things that we like to talk about are smart banking, which is what Brenna said was where people should be, which is a cash value life insurance that allows you to store money, get a guaranteed interest rate, a guaranteed dividend. Well, there's no such thing as a guaranteed dividend, but a guaranteed interest rate and a possible dividend, and use the money somewhere else at the same time and use it to eliminate debt. And that's something that Mr. Dowley's fantastic with. I know that you do that as a big part of your practice. I know it's something that I've been a big proponent of, and we're going to have a meeting next week at 5:30 on Thursday where we're going to be teaching about infinite banking, and you can call our toll-free number or our regular number if you want to get an invite to that. But this is something that should be part of everybody's portfolio. It should not be the portfolio, but it should be part of it. Just like you shouldn't have all your money in a 401k, you shouldn't have all your money in any one stock, you shouldn't have all your money in the bank. It should be mixed. It should be distributed. Got any comments on that, Mr. Dowley?
No, I think you're right. It's more than just one idea, right? We talk about private pensions. There's a time for that. And until there's a time for that, smart banking should take its place. As you're accumulating wealth, as you're looking for places to save, as you mentioned, Ted Brenna himself, who created the 401k, does not believe they are a good standalone retirement plan. So having multiple strategies is just smart, right? There's a reason we call it smart banking. We want to put our clients in the driver's seat with what they're going to do with the money as they accumulate it. And then once they build the wealth that they want, we want to make sure that we can secure it for the life of them and generations to come. So there's multiple parts, there's multiple baskets, there's a lot of different buckets you could put your money. We just want to make sure that our clients have the right money in the right basket so that they can have the right retirement and they can live the life of the financial life that they wish to leave. And thank you for the compliments, Mr. Forehand. It's a pleasure to get to work with you every day. I wouldn't be here without you and your knowledge and being able to bounce ideas off of you. And I really mean it. If you're listening to this, there's no better person to get in contact with than the wizard himself, Mr. Scott Forehand. So if you haven't written the number down, when Lee gives it to you again, make sure you do so. And don't leave it up to memory. Don't leave it up to chance. Get out of your own way. Have a conversation. The person that you have already in place, talk about finances, does not need to be the only one. Get another opinion and see what you guys can do for yourself.
Scott Forehand.